Good morning students. Today we are going to discuss about same chapter 6. Under that we are going to discuss disadvantages of company and types of company. That is your part 2. Students, listen carefully. As you know, we started the forms of organization with HUF and partnership. Now we are continuing with company. So the first disadvantage is costly and difficult to form. As we saw, partnership as well as sole trader form of organization is very easy to form, but in case of company form of organization, it is very difficult to form. There are many legal formalities. To observe these legal formalities, promoters have to spend much time and money, so they find it very difficult. Next disadvantage is scope of dishonest and unscrupulous management. So dishonest means they will not be true, as well as they will not run a fair management. The directors manage the company with the help of paid officers. If the directors are dishonest, they may make personal gain at the expense of the company. Expense of the company means what? The company money will be misused because of their power and position. Next disadvantage is management oligarchy. Oligarchy means a small group of people having control. So what it means is the small group itself denotes what? The persons in higher authorities. So few rich persons may secure control over the affairs of the company. Thus the management of the joint stock company might become oligarchic in character. That is, the management rests with the hands of few. Next is speculation. A few individuals may corner the shares to gain control over the company. Cornering the shares means they will buy the shares and sell it at a higher price. Next is lack of interest. The officers of the company do not have more interest to work hard. So why? What is the reason? Because they are not going to earn much money. So they are not having interest to work hard. Next disadvantage is lack of good labor relations. In sole trading business, personal supervision is possible, but in case of company form of organization, there is lack of personal contact between the owners and the workers. As a result, there is a scope for more industrial disputes in a company form of organization. Next is high taxation. Tax payment is high in case of company form of organization. Joint stock company have to pay high tax at higher rates compared to other form of organization. Next we'll move on with types of companies. First, incorporation. On the basis of incorporation is divided into chartered company, statutory company, association, not for profit company. Then on the basis of membership it is divided into public and private company. Then member liability is divided into limited by shares, limited by guarantee and unlimited liability company. Then on the basis of control it is divided into government company, holding company, subsidiary company. Then on the basis of nationality is divided into domestic company, foreign company and multinational companies. So there are totally 5 types of company, students. First we'll move on with classification of companies on the basis of incorporation. So on incorporation, first company, started companies. Chartered companies are established by the king or queen of the country. So the king or queen will give the charter to start the company. The powers and privileges of chartered company are specified in the charter alone. So power to cancel the charter is vested with the king or queen. Examples: East Indian Company, Bank of England, Hudson's Bay Company. The Companies Act does not apply to them. Such companies cannot be started in India. Next, we'll move on with statutory companies. Statutory companies are companies which is established by a special act made in the parliament or state assemblies. So, it is specified in Memorandum of Association as well as Articles of Association. The Memorandum of Association deals with constitution of the company and Articles of Association deals with day-to-day management activities related to the statutory companies. So, audit of statutory company is conducted by Controller and Auditor General of India. So, the report is placed in Parliament or state assemblies concerned. Example: Food Corporations of India, LIC, GIC, RBI, SBI, IDBI, Railways, Electricity, ONGC, etc. So, statutory companies enjoy autonomous status. It need not use the word limited next to its name. Next, we'll move on with association not for profit. According to Section 25, the central government may by license grant that an association may be registered as a company with limited liability without using the words limited or private limited. That means a company can be formed in order for like association. It is not for earning profit. So the license will be granted only in the case of association not for profit. So in other words, the central government will grant license only if it is satisfied that this association is formed in order for aiming profession or promotion of sports, commerce, art, science, religion, charity, or any other useful object. And next, this association has to contain that profits is not the primary object. It should prohibit the payment of dividend to its members. Such companies may be public or private companies or may not have share capital. Next, we'll move on with classification of companies on the basis of membership. On the basis of membership, it is divided into private limited company and public limited company. So, in case of private limited company, it is formed with a minimum of 2 shareholders and 2 directors. The minimum paid up capital must be 1 lakh in case of private company. And also, it has to amend by the Act, Companies Act 2015 with reference to 29th of May 2015. Another condition is that in private company, the Articles of Association states that the transfer of shares is not possible, and also it prohibits any invitation to the public in order to subscribe for the shares. Maximum of 200 persons can become shareholders in case of private limited company. So, the private limited company means it should end with the word private limited. As for example, if there is a company called Maruti company means it has, if it is a private company means it has to end with the word Maruti Private Limited. A private limited company can be formed in 3 variations, that is as a private limited company, as a small private limited company, as one person company, that is OPC. Next is public limited company. Public limited company means a company which is not a private company. It should fulfill the following conditions, that is it should contain at least 7 members. It has to have a minimum paid up capital of rupees 5 lakh or such higher paid up capital as may be prescribed. In case of private company, we saw 1 lakh, but here in case of public company, should have a paid up capital of rupees 5 lakh. It is a subsidiary of a company which is not a private company. Does not restrict the right to transfer the shares. Private company we saw, it restricts the transfer of shares. Here, it should not prohibit any invitation to subscribe for any shares or debentures of the company, and also does not prohibit any invitation or acceptance of this. In case of public limited company, the word limited should end with the company's name. Example, National Aluminium Company. If it is a limited company means, that is public company means, it should end with the word National Aluminium Company Limited. Next, we'll move on with companies on the basis of liability. The first company is company limited by shares. It means what? It is not unlimited. The liability will not be unlimited. So, the liability of its members is limited by its memorandum to the amount unpaid on the shares respectively held by them. So, only for the unpaid amount of the share value they will be liable, not for the other amounts. So, if a member has paid the full amount of shares, then his liability shall be nil. The 2 main features of this limited by shares is as follows. The liability of its members is limited to the amount remaining unpaid on the shares held by him or her. Second feature is such a liability can be enforced either during the lifetime of the company or only during the winding up of the company. Next is company limited by guarantee. So when a company limited by guarantee means during the time a member can give a guarantee at the time of winding up that he will pay the amount, the balance amount or the debt amount or the liable amount. If he says so, if he promises so, or if he guarantees so at the time of winding up, that particular person will be liable to pay the amount. So, it is limited by its memorandum to such an amount as a member may respectively undertake to contribute to the assets of the company in the event of wound up. Such companies are generally formed for promotion of commerce, arts, science, religion, charity, or any other useful object. The company is limited by guarantee may be either private company or public company. Next is unlimited company. Unlimited liability is seen only in sole trader and partnership. But here how it is possible? It can be possible by an unlimited company is a company in which a liability of the members is not limited by its memorandum. In other words, the liability of the members is unlimited. That is, there is no limit on the liability of members. The members of such companies may be required to pay companies' losses from their personal property. But the such companies have separate legal entity. Its creditors cannot file suit against the members directly. The creditors will have to apply to the court for the winding up of the company, then he will be repaid. With this, we come to the end of this part, students. Thank you, students.